Shift One Properties in Scottsdale. We're up in the west side of Ancala Country Club for a morning run. Real quick, we've got a busy morning, but wanted to check in real quick. Market update. What's happening in Arizona real estate? Residential, single-family detached homes. We've got in MLS. We have 9,390 homes for sale in the MLS. That is the first time in a long time we have seen an increase. That's about 75 more homes available, single-family detached homes. Than last week. Maricopa County, we've got 6645. That's also up about 50 more homes. In Scottsdale, we've got 856 single-family detached homes for sale. It's down about 10 from last week. So, interesting, you see the whole valley. If you're not familiar, the valley is the Phoenix metro area. On the outskirts, we're starting to see a little more inventory come up. The more desirable locations, inventory still pretty tight. 856 homes out of 144,000 for sale, or 144,000 in Scottsdale. 856 available for sale. That's still not a lot, but good to see we're getting some inventory in general in the Phoenix metro area. Prices back to June 2022. April, May last year was about the high. So we are maybe just a little bit shy of that now. But prices they're firm. People are moving here. 76% of sales are owner occupied now. So that shows a stability in the market. People who are owner occupied, that's why we look at single family detached homes, because it's more stable, it's more population flows, who's moving in and out of the area. So prices are firm, and with owner occupied, that shows kind of a sustainability in prices. Let's see what else is going on. Commercial, still crazy. You will hear office space. Office space is having some trouble. Rate resets every 2 to 5 years. It's private money. Industrial is crazy. There's, again, that chip factory in northwest Phoenix. It's hot. Actually, I spoke to a broker the other day. He's getting a lot of calls in that area. 20 minutes away from the factory. He says people who work there, which they're having a little cultural trouble hiring people there. But they want to live right next to the factory. They want to live about 20 minutes away. That puts you at Cave Creek, Surprise, Peoria, Goodyear. So those are hot markets. That's the biggest project in the world right now. The biggest privately funded project in the world right now. It's always nice to pick up nails so you don't get them in your tire. This is nice. This is recently finished. Look at that view. Beautiful morning. We can go either way. So anyway, it's busy, It's funny, July, it's pretty quiet around here. It's 92 degrees right now, but 25% humidity. I will take that over 90 degrees and 90% humidity any day. Talked to some people in the Northeast the past couple days, and it's hot and sticky. I'll go out and I'll go for a run or a bike ride in the afternoon up to 110. It's a dry heat, but it's still hot. But anyway, school should be starting in a couple weeks, so we've got people kind of scrambling to get into places. And look, yeah, we can do that. We're going to turn around. We're going to go up the hill. What else? We've got a busy morning. We're heading out to look at some property in Cave Creek. It's a commercial. It's about 2 acres commercial land. Seems like it's $1 million, but seems like a good deal for its location. We're heading up to preview some homes for a buyer. And so we'll try and go live then. Anyway, everybody's talking about, we had the CPI come out this week. Mortgage rates have come down a little bit. They're below 7% again. Everybody's excited about this 3% CPI. You know, when I started my career right after college, I was trading bonds on the Chicago Board of Trade. We didn't care about the CPI. It's an estimate. It's a statistic, yeah. So it does show inflation up and down month to month and historically. It's a survey. It's a survey of 24,000 urban households. It has nothing to do with the rural sections of the world. It's not a great number. And still, 3% CPI does not mean prices are coming down. It means prices of goods are increasing at 3%. So be careful, when you read the headlines. Still have a liquidity price crisis in the bond market. Yes, mortgages have come down a little bit the past few days, but I think 6 to 7% is the normal. In a functioning economy, you need to have about 5% return on your investment. We've just been, I don't want to get political, the past couple of years there's been a lot of free money out there. So it's tough to have a sustainable economy without a return. Investors want to get a return on their money. Hey, look at this house. That's coming along. That's a monster. It's like 8,000 square feet. It's beautiful. Anyway, so you can't time the market, but it's funny. I had a client tell me, we've been looking on the fence, going back and forth. And he said this week, he says, I want it. So that's great. I love to hear that. That's where I kind of shine. He wants the building. It's my job to go get it. So there's one we're working on. So let's go get it. A couple other residential clients said, we're ready. Let's go do it. So let's go do it. So it's funny. It's like people are coming up. Good morning. People are starting to come off the fence. If rates do drop and supply goes up a little bit, it's going to be a brawl again to get into a property. So jump ahead of it. Statistics are generally lagging indicators. They're usually 2 or 3 months behind. December was pretty slow. Not slow, but they call that the bottom of the market. I think we're about to take off again. It's, school starting here in Phoenix in a few weeks here. People are moving here. There's a lot of companies. Mesa Gateway Airport, another area. Super hot. They just, couple big industrial projects there. And where you see the big money going, you follow it because workers are coming soon. So, you really can't time the market. If you always need a roof over your head. Historically, what has real estate paid? Like 4 or 5%? Keep up with inflation. You need a roof over your head. Why pay somebody else's mortgage when you can pay yourself and make 4 or 5% consistently? So, everybody got caught up in the 2008 crash. It's not coming. And what did you do in 2008 crash? Hopefully you weren't homeless. You did what you had to do. You either sold your property or you moved on to one that was well within your budget. Loans now are getting a little bit expensive. The credit market's tightening up. So it's not always about the rate. And if you buy a house now and you get a 7% rate, and they go down, you refinance. If they go up, you're a hero. So if you want to buy or sell, just do it. You can't time the market. So anyway, here in Ancala, I had one down here on the right, just sell off market. It was like $5.15 a square foot. There's 3 houses for sale right now in Ancala Country Club. It's not a lot. The ones that are on the market, they're a little bit over $500 a square foot. The few that have sold in the past few weeks are just under $500 a square foot. So pricing's important. I would say you have 30 days to get the most eyes on your property and sell it. But we've got to run back. We've got a busy morning, got to clean up. And if we can help you buy or sell, give us a shout. We're here to help. you know, like I said, we don't work on volume. We work on, quality more. We're here to help. You tell us what you want. We'll go find it. You tell us if you want to sell it or buy it. You let us know. So we'll talk to you later. Have a great day. Be smart. Be safe. Stay cool. And we'll talk to you soon. Thanks for watching. Appreciate it. Bye.